Welcome to the video series Financial Analysis Sans Tears. This part 2 is the flow of revenues to the financial statements. Having seen how the journey of the guest check took it from the source point of sale terminal or cash register through into the accounting system, we are now in a better position to understand what happens to those revenues further. In effect, we are now getting to see the flow of revenues from the accounting system into the financial statements. To begin with, as we saw, the revenues which were summarized at the end of the day can be either cash or credit. To make matters simple, everything other than cash is classified as credit. Any transaction that is not settled in currency notes or in cash. So we begin with the cash revenue. When a revenue transaction is settled in cash, where does it go further? Well, these cash revenues find their way into the profit and loss statement. And as we all know, profit and loss statement, we have seen this earlier, is one of the 4 key components of the financial and operating statements in a hotel. So when a cash revenue transaction is settled and all the summary and total of the revenue transactions find their way to the profit and loss statement. What happens to the credit revenue transactions? The credit card settlements and the settlement to the room or for an invoice to be sent to a company. Well, once the revenue element of a cash revenue transaction finds its way to the profit and loss statement, its corresponding element goes into the cash category and travels to the balance sheet. We will see later how this actually manifests itself. So a cash revenue transaction on the one hand goes to the profit and loss account in its revenue element and goes to the balance sheet in its cash equivalent. The credit revenue transaction, on the other hand, these are the credit card transactions and the other deferred settlements we talked about earlier, find their way to what is known as receivables, or in common terms, the accounts receivables, and again find their way to the balance sheet. In order to understand this in a holistic big picture overview, let's see the entire scenario. Revenues, whether cash or credit, find their way to the profit and loss statement. The cash settlement part of the revenues travel to the balance sheet under the cash category, and the credit revenue settlements, which are the receivables, also travel to the balance sheet under their own category. This is actually the flow of revenue. Let's make this more clear. Revenues can be room revenues, food and beverage revenues, minor operating department revenues, and other revenues. The total of these revenues can be called the gross operating revenues, and they travel to the profit and loss statement as we know before. On the other hand, the cash revenue element of the cash revenue transactions are added to the cash and bank category, while the receivables, which represent the credit revenue, travel to the accounts receivables category, both in the balance sheet under the category current assets. So this is how it looks. So in a way, these two elements of a single transaction or a series of revenue transactions, the revenue element going to the profit and loss statement and the cash or credit element going to the balance sheet, is what is known as double entry bookkeeping. This basic principle will go a long way in enhancing your financial analysis knowledge of concepts. This builds the foundation for us to understand more analytical elements of the profit and loss statement and the balance sheet. Thank you for being with me. I hope you enjoyed this episode. See you soon in the next episode.